Hey, this is Matt from InvestiQuant. Today is Tuesday, November 10th, 2020, and yesterday was a wild day in the market. I cannot remember anything quite like what we had yesterday, where we had an enormous up gap that opened up at all-time highs and then sold off a little bit early on, but then late in the session, it really sold off. It doubled its range late into the session. S&P ended up with just over 100 points of range, and it closed about 90 points below its open. So it's got this giant red candlestick that closed above Friday's high and above all kinds of recent highs. So we had a giant up gap that put in a big red candlestick, and I figured we would take a look at that type of pattern. You know, it's going to be hard to get too specific around what happened yesterday because you just won't have any samples since it's kind of a historic-like day that we saw yesterday. But we can describe the action that we saw in a way that does happen somewhat regularly, and we'll see what that has led to in the past. So we're going to be doing this in all four instruments, and the pattern that we're going to be looking at is when you get the largest up gap in the past 20 sessions, and then you put in a red candlestick that day. So I've selected all four instruments. The setup's going to be based upon going long at the open, which is 9:30 a.m. Eastern time. It's going to exit at the close, which is 4:15 p.m. Eastern time. Now, at the time of this recording, we've got pretty mixed gaps all around. So we have two instruments currently trading lower, two that are trading higher. I have no idea where we're going to end up at the open. So I'm going to skip over the opening filters section, but I would encourage you guys to dig into this on the instrument that you're most interested in this morning. When it gets closer to the opening, you know what the open is going to look like. But for now, I'm going to skip that, and by skipping it, it will give us a few more samples. Next, I'm going to go into price patterns. In price patterns, I'm going to select two different options here. The first one is going to be that we closed below the open. I'm just going to take this from the active today section over here. So the close was under the open. That creates the red candlestick pattern. And then at the bottom, we have a long list of things that happened yesterday and are in play for today. I'm going to go down to the very bottom option that says day after largest up gap in 20 days. So I've added both of those to the study here. And then lastly, I'm going to put it in a bullish environment of above a 10-day and above a 200-day simple moving average, and click view results. And here we go. So these are the results of going long at 9:30 a.m. Eastern time, exiting at the close 4:15 p.m. Eastern time, following a day that was the largest up gap of the past 20 sessions, and it put in a red candlestick. So it closed below the open. This has taken place above a 10 and above a 200-day simple moving average. Again, no opening filters here. I encourage you to do that on your own for the instrument that you're looking at as we get closer to the open. Historically, we've got 36 samples in the S&P, 40 in the NASDAQ, 39 in the Dow, and 34 in the Russell. And the win rates on these coming in mostly favored. So you've got the S&P at 58%, the NASDAQ 63%, the Dow 67%, and the Russell 53%. And if you look at the average win, average loss on this, you do see the average loss is coming in larger on all four of these. So average loss larger than the average win here in the S&P. That is just slightly true in the NASDAQ. Those are more similar, but that's not the case with the Dow. It has a much larger average loss compared to average win, as does the Russell. So 3 out of 4 of these have a sizably larger average loss compared to its average win. NASDAQ is more neutral there, where they are similar in size, and the win rates on all of these are slightly favored to the bullish side. And again, this is without any opening location or criteria added to it. So probably something you'll want to add to this once you know what the open is going to be like. Also, before I sign off here, Thursday after the close, we are going to be hosting a webinar announcing our auto trading. So we've had a lot of requests about auto trading quantitative strategies, and we've actually done that for a long time, but we'll be making a public announcement and webinar on Thursday at 4:30 p.m. Eastern time. there's a link below this video where you can sign up for that webinar if that sounds like something you'll be interested in. It's a pretty exciting new program that we've got. I think you'll like what you see. So if you're at all interested in auto trading, go ahead and sign up for that. And we'll have that webinar on Thursday after the close. So good luck today, guys, and we will see you next time.